Well, we just saw those China CAIXIN PMI services and composite indices registering a pickup in September, and quite a beat when it came to services as well, 54.8, which was better than expected. Let's get some more reaction now from ANZ Chief Greater China economist Raymond Yeung. And we're going to talk a little bit more about his new book as well, China's Trump Card, the cryptocurrency and its game-changing role in Sino-U.S. trade. Raymond, good to have you. Let's talk through these PMI numbers as well. I think they're a little bit dated now after some of those numbers that we're getting out of the Golden Week holiday. But all that combined, what does this tell you about the recovery in China now? Is it broadening out further, and how strong is it?
Well, I think the CAIXIN PMI number this morning does not supply us, because actually the official PMI number for September released before the holiday already told us the good news about the recovery of the Chinese economy continues. I think after the past few days of the national holiday, we can all confirm that the service sector, especially for restaurants and retail sales, seems to be on track of a good recovery. So we're not surprised by the number. And I think what's telling us is that we're pretty confident about our forecast for the national GDP this year to hit 2.1%. And that should be a decent number and tells us that China is leading the global recovery.
Yeah, and we've certainly seen that with the pictures that happened during Golden Week. In terms of the consumer, it seemed like up until now that it was really reliant on people buying luxury goods among richer consumers as well. Is there more the government can do to actually jumpstart consumption?
Yeah, I think there's also some pent-up demand as well, after a few months of turmoil by COVID. And it seems that this year that the national holiday also happened at the same time with the mid-autumn holiday. So it seems that the positive sentiments already boost the consumption and the domestic travel to some extent. So and also the COVID case number is very encouraging in China in the past few months. So with this, less social distancing compared with other countries, I think even without a strong stimulus, then the Chinese consumer are still willing to buy.
Raymond, does this all play into, and should we be focused on now, the potential of inflation in China? There was some discussion during the Golden Week holiday of food shortages in China, some reporting, and it was controversial for some. To what extent is inflation a factor now that officials here are focused on?
Well, I think overall the Chinese economy is not faced with a strong inflationary pressure. In fact, if you look at the core inflation, the core CPI number is continuing to be very low, and PPI continues to be negative at the moment. Now, of course, that the food inflation is subject to lots of supply and demand factors, but I think this is more a transient factors rather than a structural problem of the Chinese economy. So cyclically, I think the inflation level in China is still very low. And actually, on the producer front, the inflation number is stubbornly low. So it would not be a key target for the policymaker to, when they come to a policy decision making, that inflation number is probably not their target at the moment.
OK, Raymond, let's switch the focus now to your book, China's Trump Card, Cryptocurrency and its Game-Changing Role in Sino-US Trade. It's a fascinating topic. What is the main thesis?
We see that actually whoever wins the upcoming U.S. presidential election, the Chinese economy and the U.S. economy will still be under pressure in terms of whether they are going to decouple or not. So that also means that the deglobalization will probably prompt some sort of de-dollarization to some extent. Now, we know that the U.S. trade deficit problem has been a structural problem because of the dominance of the U.S. dollar, some sort of moral hazard that can fund the U.S. persistent trade deficit for a long time. What the world needs is probably a new payment system that can also be a non-partisan solution to avoid any geopolitical conflict. So my thesis, in a nutshell, is to propose that having some supranational or all countries come together and reform a payment system so that the world economy can run smoothly, at the same time address the persistent trade deficit of the U.S.
I mean, essentially creating their international payment architecture, if China does make it successful, it's like creating another SWIFT. In a way, does it actually add to the more of this theme of decoupling between the U.S. and China then, Raymond?
Yes, I believe that there will still be a lot of debate or a lot of concern about whether a form of cryptocurrency or blockchain-based currency or digital currency can replace the needs of sovereign currency, especially the US dollar. But look, whenever the US is making the decision about fair decision, and it's based on, a domestic set of data about the US economy, but the impacts actually happening or affect other economies, including China. And now that with these decouplings started to surface, then probably even without, the new development, I think China will continue to, or will start to think about a de-dollarization process. So some substitute is required to replace the role of the US dollar as a reserve currency. Then a blockchain-based currency could also play a role to some extent to address the issue of this geopolitical tension as well.
Just very quickly, Raymond, will it boost the internationalization of the renminbi?
I think that recently there has been lots of discussion about whether the Chinese digital yuan that's being pushed by the PBOC will be a solution or a promotion of the renminbi in the offshore market. Now, when we look at this digital currency proposed by the PBOC, it's actually a form of electronic M0. The very nature of this money has not changed. So what I propose in my book is basically propose a new form of payment technology make use of the blockchain as a payment platform. So to some extent, the current form of digital yuan will not be a solution to change the structural problem of the global payment platform.